Thanks for joining our event, How Top Credit Union Marketers Will Drive Growth in 2024. We're going to get started at the top of the hour. Thanks for joining today's event, How Top Credit Union Marketers Will Drive Growth in 2024. We'll get started in about 2 minutes. Thanks for joining today's discussion, How Top Credit Union Marketers Will Drive Growth in 2024. We're going to get started in about a minute. Thanks for joining today's event. I'm going to give it maybe another 30 seconds because I see a lot of people signing in. Welcome, everyone, to today's conversation about how top credit union marketers will drive growth in 2024. I am joined by Sue Burton, the Senior Vice President of Digital and Marketing at DCU, Becky Giannelli, the Director of Integrated Marketing, Digital and Creative at PSECU, Alana Levine, Chief Revenue Officer at Fintel Connect, and Jen Packarr, the Chief Product Officer here at Digital Onboarding. My name is Laurie McLachlan, and I'm the Chief Marketing Officer at Digital Onboarding. And now I'm just going to ask our panelists to join on camera. So it's been quite a year. Rising inflation, interest rates, talent shortages, all of these things are making it hard for credit unions to grow. And I think just about all of us are working on our plans for 2024. So I thought I'd pull together this stellar panel to kind of share ideas about, what credit unions are looking at, where they're finding success, things they stopped doing, and just to share some general advice. So I wanted to start off by talking to Jen. when we think about plans and next year, it all starts with a budget, right? And so can you shed light on how credit unions are allocating their marketing budgets?
Yeah, absolutely. Thank you so much. Yeah, so typically on average, it's a percent of their total assets. So for credit unions, it's about 0.12% of their total assets. So for a $1 billion credit union, just, simple math, that's 1.2 million about it as a total marketing budget. But then if you look at how they start breaking that down, digital forward credit unions are spending about 20% of that budget on the digital marketing, which is about 240K out of that $1.2 million. So, and just to give you a stat to kind of put that into comparison with the rest of the market, Gartner did a study about a year ago, so maybe a little bit out of date, but other industries and other marketers are spending about 29% on marketing automation tools alone. So just to set the stage, I know that digital marketing spend continues to rise, but just about a year ago, 29% other marketers spending just on digital marketing automation tools, and about 20% for digital marketing forward credit unions.
Okay, so that gives us some perspective. And I just wanted to add that we're leaving neobanks out, and they are way overspending compared to their asset size. Chime blew $80 million last year. That's how much it takes for a car company to launch a car. Like, it's crazy. So they've got deep pockets, and their investors are willing to spend money. All right, so we're all getting our budgets and we're looking at our goals. We know that one of the major goals that every credit union has is to become the primary financial institution to help members with all of their needs. Sue, I wanted to bring you in on this part. I know that you joined DCU in May. What is DCU's, in your perspective, on PFI status and the definition?
I think it's evolving. I think in banking and financial institutions in general, it used to be all about the checking account, but in today's rate environment, it's all about deposits, right? So I think one of the predictors of success we would look at is direct deposit. Like, that is really the holy grail in terms of getting a member on board and being fully engaged. And bill pay is a big predictor. And I think, behaviors for primary financial institutions really vary. Like, I look at myself, you might say American Express is my primary financial institution because it's all about running so much of my daily financial transactions through that platform for rewards. So I think the definition is evolving, and I think that deposits are so essential to everything else we're doing in terms of our ability to lend, that it's really about direct deposits for our institution.
Yeah, I'm so glad you brought that up, and I'm glad you mentioned Amex, because I heard Ron Shevlin, Cornerstone Advisors, on my shoulder whispering. So he's out there educating on paycheck motels. So they're getting that direct deposit, and then they're making a large transfer to pay their Amex bill. Amex is their PFI. So I'm really glad you hit on that. Becky, how is PSECU thinking about your definition of primary relationships?
So we really are working on redefining that. One of the things is, for PSECU, we are what is called a digital first model. We really don't have your traditional branches. And so when we think about a PFI, it's really that engagement with our digital tools, the engagement with online banking or engagement with our app. So similar to what Sue said, that makes, American Express her PFI because she's engaging more often using the platforms that are available.
Yeah, good point. I think we're all trying to get at a new definition for the same thing, because behaviors have changed, and it's so much easier for people to access fintechs and use their credit cards. Jen, do you have a perspective on this?
I've done a lot of reading on this because, when we look at, what our ROI is as we bring our solution to market with credit unions, it's, what is the most important to them. And our old model was looking at, reoccurring payments, right? The direct deposit using the debit card. And that still roughly seems accurate, but, just doing a lot of reading, there are a lot of definitions now. It is not just one. I read some somewhere that it was whoever has the most data. And I was kind of scratching my head. I was like, how does that make sense? Credit unions, banks have had a ton of data, but not at their fingertips. For, marketers have a hard time gaining access to that data. So I'm not really sure that is the answer, but the whole point is that there's lots of different definitions today. And I think the number one thing is understanding your base, understanding what profitability means in your base, understanding longevity in your base. What does that look like to you? It might look very different from one FI to another now, and it should. I think that should. No one's business model is exactly the same. So I think that's really key, is to be able to look at your own base and understand profitability and longevity within your own members.
Yeah, and so if the goal is PFI status, there's a couple ways you can go about it, and ideally both. You can try to acquire more of the right members, right? To make sure, if someone's only coming to you because you're offering a $200 cash bonus, it's probably going to be tough to turn into the PFI. And then separately, you can do a lot to engage your existing member base to help them adopt more products and services. Alana, I want to start with you talking about the top of the funnel, acquiring more of the right members. Can you share your advice on that matter?
Sure. I feel like that was a very smooth transition, because it has to start from having that clear picture of what your ideal member looks like and what you're looking to build in terms of your products and solutions, what you're known for. I think one of the most common questions that we often ask our clients that we work with when we're looking at helping drive more net new growth into the top of the funnel is, why your credit union? What are the things that you're looking to achieve? What value are you looking to create for your member base? And I think that becomes the foundation to be able to answer that question clearly. What's so interesting for us is we find a lot of times how and what the messaging is and the current product structure is built, how it's built, directly conflicts with what you're ultimately looking to achieve. So you may look to drive, net new deposits through a CD product or a money market product or high yield savings product, but the requirements to which you become, a new member and open an account, or to how you actually open that account, or what value you're creating for them, it doesn't always align. And I was having this conversation at Money 2020 with one of our affiliates from the Penny Hoarder, actually. And he was saying, a lot of times the goal is, how do we become the primary financial institution? And the requirement and the barrier to do that for someone net new to you that doesn't have an experience with you yet is so high. So how can we help to reduce that barrier a little bit, so that there's an incentive tied to, bill pay maybe, or certain elements or transactions where you can start to build that foundation? Because then it becomes, once they're in the door, you then can wow them with all the other things that you have to offer and build that relationship from a retention and cross-selling and engagement standpoint.
Yeah, I like where you're going, which is it's not just about the products, right? It's also about the experience. And nowhere is it more evident whether your product stacks up or not than on a site like Bankrate. And that's some of the work that Alana does. So, and guess who's on Bankrate? A lot of these neobanks with, they're paying high rates. They've got 2-minute applications, all that stuff. And we know that fintechs opened 47% of all checking accounts this year. So how does a credit union appeal to a younger membership at the top of the funnel? And I wanted to turn that question to Sue, because DCU has the youngest membership in the country. Half of them are digital. And so when you think about acquiring more of the right members and you want younger ones, what is your advice?
It's a really interesting question. And I think my advice probably evolves with the day, right? And as we're learning more, Digital Federal Credit Union has an advantage, probably in our name. If you were to organically search Digital Credit Union, as I think a lot of Gen Zers might, our name would come to the top of the stack rank. And when it comes to a younger cohort, I think even just creating an understanding of what the value proposition is for a credit union is important. They might not know that they are either eligible to join a credit union or see what that value is versus a neobank or another FI. And if I think about it, where we might want to be a primary financial institution, that might not be the specific interest, especially of a younger cohort. I don't think that there's a singularity for them. So for us, the value proposition becomes a fully realized member value. And I think that's both sides of the equation, and it's getting consumers to move beyond a rate game and to say, this is about a relationship. And ideally for us, you probably, especially as a younger consumer, are coming to us for credit. You might be looking to build credit. You might be looking for your first auto loan. Maybe you're looking for a savings account because you're trying to earn your way into a deposit on an apartment. But you've got a very tactical need that you're deciding a credit union would be of value to you, and you establish that relationship. So then it's incumbent upon us to do two things: showcase incremental value. Where can doing more business with our credit union provide more value for you? And then hopefully also unlocking that net promoter score to get them to refer to their friends, because that is the leading source of information for young consumers, is their peer group. And so that is really an opportunity. So for us, the game is really to attract, to deepen, and then refer those members. And, again, I think we have some tailwinds and opportunity by virtue of being a digital platform and being known for that as being modern. And we're looking to build more financial education, more content, more products that really meet the needs of younger consumers. And then hopefully we're able to deepen and get them to refer us more aggressively to their friends.
That makes sense. I want to ask a follow-up question. When you talk about, maybe they come in and they're not interested in a deep relationship yet, and you want to kind of prove the value to them, are you all considering any sort of like relationship packaging or rewards? Yes?
Yeah, I'm so glad you mentioned that, because it kind of circles back to the model of, like an Amex model, right? Like, what drives me to run things through Amex as a consumer is rewards. And so we're looking at things like an overall relationship benefits, and what are some rewards that we can provide, whether it's through credit card, debit card, other facets of membership. And the thing about credit unions is they're so interesting. They're very much a model I look at REI as a great out of category analog. Whenever I go into ROI, which is a co-op, I feel the benefits of my membership, and they continuously come back to me with offers of incremental value, but it's just really continuously reinforcing the value of that membership. It feels different than shopping at a Target or another retailer. And so I think we as credit unions, by virtue of our community membership model, really have an opportunity to learn our way in to creating those unending membership rewards and ways to delight and more deeply engage our members.
I think that's brilliant. I think that is the future for all the credit unions on the line right now. Older millennials are favoring mega banks. Mega banks stink at this. Their data's a mess. They've got one department doing half of this and half of that. This is how to win, is to really give people reasons to give more business to you. Becky, do you want to win? I know that you've been shifting a lot of your strategy from traditional channels to digital since you joined.
Yes, so I've been with PSECU for 3 years, and when I started out, we had a lot of our budget, our advertising budget, spent in traditional channels like television, radio, billboards, even print publications. At our roots, we are Pennsylvania State Employees Credit Union. Well, we have to branch ourselves out. We are that digital first model, so we have the opportunity to really represent our products and services nationwide. And so we started to switch more of our budget into the digital channels. So now, instead of doing TV and radio, of course, we're doing search and social. And that's been a way for us to also specifically target different markets. You're not going to, advertise to what we call a long-time loyalist the same way we would for a young family. right? So that gives us the opportunity to target our advertising. The other thing that we've done is we've created buckets. You know, we've talked about how kind of volatile this market is, and when you're in, you know, the financial space, you're in that constant, I need deposits, I need loans, I need deposits, I need loans, I need deposits, I need loans. And in the digital space, we can move those budgets around quickly. You know, we can answer to the need of the market much more quickly than I can, like, you know, pulling an ad out of a print magazine. So we've created our buckets, and we put a lot of those buckets into the digital tools.
That makes sense. I know one of the things that I thought was interesting that you tried digitally was influencer marketing, and you've got some learning there.
Yes, so we did some influencer marketing, and I would say it was a little bit more pray and spray than I wanted it to be. You know, it gave us a good opportunity though to learn new channels and see what we can do. And we learned a lot. And what we learned was that we only want 1 or 2 influencers that we can work with to develop a more meaningful relationship. So it's similar in the way that we want to develop a more meaningful relationship with our members. We actually want people to represent us that also have a meaningful relationship with us. So we kind of just, you know, turned the switch off a little bit, regrouped on it, and are looking for ways to build up that program again.
Great. So as we're talking about ways to motivate members to want to give us more business, obviously the way we structure our products, reward them for their relationships are all good strategies. There's one that sounds awfully simple. Sometimes it's difficult. Removing friction. So I know at least a few credit unions that we work with that their goal is to be the easiest credit union to do business with. It's how Amazon built such a big business. And I wanted to talk to Jen about this because you can have the best products in the world. You could offer them $1,000 bonus, but if it's difficult for them to do something, they might abandon. Jen, what's your advice for credit unions as they look for their biggest opportunities next year?
Yeah, I think at the largest scale, I think it's really ensuring that there's alignment from the top down in the organization, making sure that those priority marketers are aware of the key priorities and really understanding the levers that they can turn. But just from this specific topic of reducing friction, it's really important to, everybody says, you know, go digital, but I think that there's a human element in there that is so critical to blend human with digital. And that's where I think is a really great help when you're going along a guide or a new process to ensure that there's help at their fingertips as well. So when they feel like they need to jump out of the process because it's too difficult, there's help right there. And you can do that with a lot of digital tools like chat within, you know, some digital savvy guides. As well as, you know, even when you're at a trade show, it's that human element, you're at an event, but you can still have that digital element there where you can kick off like digital journeys and have the ability to send them digital collateral so they're not carrying something around and then it gets lost and then they forget who they talked to and they don't remember you. So there's definitely, I think the blend of digital and the human element is so critical. I love the rewards component too, always incentivizing, right? That gamification, especially with your younger audiences, gamification is huge. It plays a huge role in today's society. And I think that gamification as you're going through processes, maybe something's difficult, but being able to reward them along the way or show them how, if you just do this one last thing, you can get this many points or this reward, I think it really helps. So I think those are some, and of course, digital tools, right? Just digital tools allowing for that, reducing friction.
Yeah, so seamless, you know, it's not one or the other. You know, the future is figuring out how to blend those things together. I do like the point you made about field events, because I know credit unions, they do a lot of employer events and otherwise, and you probably don't want to be handing out brochures telling everyone how innovative you are. Alana, I know that this topic is near and dear to your heart. When it comes to bringing people in at the top of the funnel, and you think about these digital applications that maybe we think are easy but aren't, how significant is the impact of a frictionless experience at the front end of the relationship?
I mean, it's huge. It's the difficult thing nowadays is because everything is so accessible and everything is really done digitally. I remember we did a roundtable session with a bunch of executives at financial institutions, and the question that was posed to them was, you know, what's the last major transaction you did on your computer versus your phone? And everybody had said, some guy bought a car on their phone. So they bought their plane tickets on their phone. They were making big financial purchases and decisions digitally. So when you're looking at an experience, you're not providing a benchmark or litmus test against, you know, the big banks or neobanks. You're actually comparing it against when you buy your coffee, when you're shopping on Expedia. The expectation is the same. And so it's important to really look at it. The difficult thing about being a financial institution is you have to balance it with obviously the risk and protections and KYC and the anti-fraud components that are critical. And so I think the question is understanding what flexibilities that you have as an FI to experiment and start to understand. So we have a theory in marketing at Fintel, which is hold on tightly, let go lightly. So it's the same way. It's, you know, we're not saying go gangbusters and take everybody and, you know, open the floodgates. We're also saying, okay, let's cherry pick an experiment, and ideally the vendors and technology partners that you're working with will allow you to have those experimentations so that you can find that sweet spot. We have had conversations with fintechs where they're asking significant information at the front end of an application, which is they're seeing huge drop off, when really the first critical litmus test they should be doing is just doing a quick soft credit pull to make sure that they're even eligible before they even go on to apply this information. So that little change can prevent you from having to spend money with unnecessarily, create churn, and with relationships that you could potentially say, hey, sounds like you may not be a great fit for this product, but you know, what about this product? There's a credit building tool, and then it opens that opportunity for you to create an even greater relationship with that future potential member. So for us, what we do in our marketing is we're very much tied to results. The affiliate channel is a bottom funnel tactic for the most part. If we can track to open funded account, that is the financial model that gets used when you're compensating these third parties. So that application funnel is critical for us. We're sending good people in and they end up dropping off. It prevents that opportunity. So anyway, it is very important, and it's something that I would highly recommend before dumping any money into driving those acquisition tactics, working out where the kinks are in advance.
Yeah, it breaks the marketer's heart to spend all that money to get somebody to apply and then you lose them. So yeah, it's really about just making sure that you're making those experiences simple and keeping them engaged. Okay, so that's friction. Let's talk about, I'm going to shift the topic to a different area, credit unions. Auto loans are big in this industry, and a lot of credit unions do indirect auto loans. And so there's a situation where they're forming a relationship through a dealer, and now we need to find a way to get in touch with them and deepen the relationship. I want to talk to Sue about this first, because I know DCU is a big auto lender. And although your volume is direct, I'm sure you're still dealing with this challenge. Do you have, I guess, words of advice on trying to tackle this opportunity?
Sure. Well, we do both direct and indirect auto lending. And there's also a real opportunity we find with our members and consumers at large, which is auto refinancing. Many people, now that auto loans are longer, they don't realize that perhaps there's an opportunity to refinance and receive more favorable terms. So that's an incremental opportunity for new consumer acquisition. But in terms of advice, it's like when you're somewhat disintermediated in the relationship, it can be a challenge. And so tying back to what Alana was talking about frictionless, it all starts with mapping that potential member journey and thinking about this more broadly from the experience, and where is there an opportunity to introduce value or connect. It might be an incremental product or opportunity. Somebody's bought a car, right? They have a loan. So there's a refinance opportunity. There is a loan maturation opportunity. Maybe they're in the market for a new auto loan at that time. If you have the window of time when that note is coming due, maybe there's an opportunity in the natural kind of cycle of auto insurance. People kind of reconsider their auto insurance or add-ons at different moments in the year. Maybe there's an opportunity to provide incremental value by savings. But I think it's mapping that journey. And again, we try to think about this as humanity, facilitated by technology, right? It's like, how do we really think about putting the human at the center of this and what the ecosystem of their experience is with a loan? I mean, nobody gets a loan for the sake of getting an auto loan. They get a loan to get a car. So what are all kind of the surrounding elements of car ownership, car value that could be added? And where is the opportunity, to the extent you have that data, where you can reach out to that member and say, listen, there's something more we can do for you here. So at the upfront, you're always able to buy down your rate by doing direct deposit with us to start. So we have a little bit of a relationship head start. And then it's just really thinking about all of the ways you can have an intersection with that member and create value and create some more visibility for the incremental value of membership.
That makes so much sense. Understand your members, understand their needs, and design around them. You said something that I thought, it really resonated with me, which is no one needs a loan, but they probably need a house. And my gosh, if I look at most FI marketing, no one needs a HELOC. They want to improve their home, right? So message to the benefit. And Becky, I'm pretty sure you learned something interesting on this topic with ATMs, and it changed the way that you're promoting ATMs.
Absolutely. So we kept on hearing from our members, that we didn't have enough ATMs. We didn't have enough ATMs. They couldn't find an ATM. So we invested a lot of time and energy into our ATM locators, as well as we joined the All Point network. We have over 70,000 ATMs. And then we realized nobody was using them. So those same people who were asking where my ATMs are, they weren't using the ATMs. As we dug into it further, what they were really asking for was access to their money. How can I access my money? We're a digital first model. We really have one branch in the heart of central Pennsylvania. So if you're not nearby, you're not going to be able to get there. So, it enabled us to talk to our members in a different way. Instead of, hey, check out our ATM locator and find one of our 70,000 free ATMs. It was more about, you have 24/7 access to your money.
Yeah, that's I think that's just such a good story that illustrates, why you've got to get to that underlying need to really understand. And maybe you have to ask why 10 times. I know Bob Moesta, with his jobs to be done framework, really gets at this, is really figure out what it is they need so you can design around them. Continuing on that front, so as we think about marketing, and, to me, it does seem like a lot of advertising about features out there, and a lot of it can feel generic, yet in the press, there's so much about AI, data, personalization. And so I feel sometimes like we're talking about personalized relationships and personalized marketing, but maybe everybody thinks that means something different. I wanted to bring Jen into the conversation to talk about what's possible with personalization and what credit unions should be striving for.
Yeah, absolutely. Yeah. So when I think of personalization, I'm not just thinking of like first name, last name, right? That is, 1990s. So that's been around for a long time. When we look at personalization, it's, what Becky was talking about, really with grouping their members into different segments. So you understand their needs, you understand what's coming next, you kind of understand maybe their way of thinking. They all have something in common, right? I think it starts with really understanding your member base. And if you don't have access to the data that gets you to that segmentation, then you can start at the simplest level of simply just asking. You know, I know surveys are, you know, kind of frowned upon maybe when you look at larger data strategies, but even when you look at those larger data strategies, there's some inferred data there, right? So when you think of, you know, my best friend was having a baby. I went to, you know, Baby Gap. I went to, you know, all of these baby places. And then all of a sudden I'm having a baby and I'm not having a baby, you know? So it's like that inferred data. So yes, big data is super important. It's super critical. There's key life indicators in there. But, you know, you can just really ask the question, what are your goals for the next 6 to 12 months with your finances? How can we help you? That's so huge, and it goes such a long way. And there's so many different research out there that says that consumers will answer personal information if they believe it can help them. So just ask the question. I think it's really, really critical, and it's underestimated today. And that gives you the way of personalizing how you communicate with them over the next 6 to 12 months just by asking a couple easy questions, right? So I think it's really important to do not just mass market, because the next time you send something, if you're just mass marketing, that consumer, that member, they're going to ignore what you just sent them, because they're going to say it's not interesting to them. It's not relevant to them. So make it relevant, make it personalized. And the simplest way is to ask the question if you don't have the data.
Yeah. So you said, you know, you really need to know your members. And then I thought you said something very important, which is look for things they have in common, because that can inform your product strategy. That can inform your servicing strategy. Sue, I know DCU recently looked at their member base and just, you know, figured out that you have a large group of tech workers, tech companies, and that was informative. Can you tell us that story?
Sure. So we took a deep dive on our member data. We also added the Experian Mosaic overlay to really understand our members. And it was interesting to learn how affluent, how technically astute they were, how many came from not only Legacy Digital Equipment Corporation, but just in general, we had many influxes of, I think, of H-1B1 visa holders who came into sort of the tech landscape, and then they tended to refer to other members of similar circumstance. So we have a real concentration of technology professionals. And so that is an affinity group, and they continue to refer to like. And so we have a number with 1 million plus members, you might imagine, there's a number of different communities of interest. And we're trying to deeply understand them, both from a demographic standpoint and also from a psychographic standpoint. We're standing up an online member community that will be statistically representative of our member base, so we can understand the sub-communities within the communities. We are nationwide, and yet we are a hybrid model. So half of our membership is within the greater New England area where we have a branch network. That is a natural geographic affinity. That is an opportunity. And then we've got half our member base who have a digital only relationship with us. And there's some geographic clusters within that. Those are affinities. Tech workers, our population over indexes significantly on sort of a South Asian standpoint. So we look at things, even our sponsorship strategy where it may have been geolocated, suddenly we're looking at things like maybe cricket is an opportunity to connect with our audience and to make them feel seen. So it's really understanding a number of dimensions of your membership and understanding the connectivity between your members, because it's you know, at the end of the day, credit unions are a community model, and our community is rather large, and there's communities within communities, but they happen incrementally. And to your point, Jen, talking about goals, it's so interesting. We're starting to add those capabilities in our digital experience for goals, for spending insights, starting to see people coalesce. You could have a community within your community of people who are saving for a wedding. You have to be careful they're not just wedding guests and we don't just improperly target them. But if you have these community of members who are saving for particular goals, for example, or things are on their mind, then you can really engage with them in a more meaningful, substantial way about their lives versus just their finances. And that's really where you're paying off the largest benefit of being a credit union.
Yes. Yes. So really, in order, you know, if you want to be able to do personalized marketing and build personalized relationships, you got to know more than their age and first name, right? You got to really understand their needs. And I just think that work about, seeing what their occupations are and what their likes and dislikes are makes a ton of sense. I know of a bank in Massachusetts that did the same thing they discovered they had a lot of property owners in their customer base. So they built a whole suite of services around that. So it just gives you the opportunity to be more personalized and less generic with your marketing. And Becky, I know that, you think a lot about how the credit union can stand out and be different. What's your approach to making PSECU distinct?
So I would say that our educational component, our financial educational component, is really what makes us stand out and be different. As we talk about these different segments, right, we have learned that we've got a lot of long-term loyalists that are getting ready to retire. We also know that the retired segment is really susceptible to fraud. And so we're putting together a whole financial education package around fraud. How can we help these folks that are, now maybe relying on other people to give them information or to give them advice? How can we provide them with the quality information that they need to make good choices? So taking a look at our membership base, taking a look at the market, what's needed in the market. Fraud seems to never go out of style, right? So there's always an opportunity to educate your members. The other thing we do is we work with local high schools and even universities that we provide financial education information. We do something called Reality Fair, where we bring a high school student through. We give them a job, we give them a salary. We ask them if they want to rent or own, buy a car. By the time they're done with it, we sit down with their budget. They realize they're going to be living at home for another few years, and they come back through the line. But it might be the first touch point that these students have with real financial information, since a lot of schools have stopped doing the home economics courses where you learn to write a check or even to budget a balance. So it's that financial education where we like to come in and really give our members the support that they need.
Financial education is a very hot topic right now, and for good reason. COVID, rising inflation, interest rates, Americans are begging for help from their financial institutions, and they're not really getting it. And so, we always like to say around here, people probably aren't going to remember the 6 features in your checking account, but they're going to remember how you make them feel. And if you're able to deliver real help in a time of need, like PSECU is doing, it'll go a really long way. So I think that makes a lot of sense. I want to continue on that topic of differentiation, because I think Alana has a unique perspective. Fintel Connect does a lot of work with affiliate marketing. And if you don't know what that is, think of like a bankrate.com. Think of comparison sites, bloggers, things like that. So this is a unique situation where your marketing is literally stacked up against everyone else on that page. And I'm just curious, like when it comes to a sea of sameness and institutions that are doing a really good job of standing out, Alana, what do you think is working for them?
Yeah, it is. I want to first clarify and say, I can't tell you how many inquiries we get from potential FI partners that say, someone on our board wants to know why we're not on Bankrate. How do we get to be on Bankrate? And that's the question we get asked. And of course, they're such a prominent player in the space. And sometimes it's challenging. It's challenging because it's really cost prohibitive. It's hard to work on the metrics. If you can't track it, it becomes difficult to justify the spend. So there's a lot of reasons why I would say that may not be the easiest entry point into testing the channel. There are so many facets to working in the affiliate marketing space, and to tie back to what Laurie, what everyone really was saying about education and helping people understand the value that you can create. These affiliates are really a great destination when people are doing long tail keyword research for a particular need. These guys are expert content marketers. They're powerhouses in SEO. They understand how to create information and distill it down in a way that's going to help feed people, make it easier for them at that consideration stage of the buying journey to make a decision. And so they're a great actually litmus test to inquire with them about what they're finding their audiences are most looking for, searching for, what are their priorities, where are people most engaging with content on their site, to help direct our clients, and the clients that are willing to hear the feedback actually have a tangible third-party impartial source to say, hey, listen, these are the things our audiences are really needing. Have you thought about incorporating this element into your product, or getting the messaging right around, we call it the sizzle versus the sausage. So the sausage being the ATM, the sizzle being access to your money. It's how do we help frame that, and how do you help these third-party marketers become experts and brand advocates for you, so they can better tell your story and really feature and showcase the things you have to offer, because then it's going to help you find the right types of members you're looking for. Just because someone clicks through, they may not be the right fit for you. And so it's important to help them make that decision. And I think the things that we're seeing that people are looking for are those things that make their lives easier, that help them live their day-to-day financially in a safer way, whether it is around credit building, whether it is around just having that transparency on their credit score, specific rewards depending on how they transact. I know for me, at least, going back to Sue's example with Amex, is I never really used to pay attention to the incentives in my app, but now I go back there regularly. They've conditioned me because they know that I like to eat dinner at Minami down the street for sushi, and now I got a coupon for it because I paid with my Amex. Now they know that, and heck, I'm going to go back because it was actually a really good deal. So those little things, I think, that create those healthy behaviors, and being able to convey that in messaging. And I think sometimes it's hard to do it in an ad or in a social media post, or as the brand. But I think these third-party destinations and sites that could do a dedicated product review or brand review, or it's not just being, listed in a comparison table. It's easier to really convey those values that you have to offer than just, like rates or things like that.
I like that distinguishment between the sizzle and the sauce. And it's like, so features versus benefits. But I think there's also kind of on marketers' minds the questions of, how much is this about branding, and how much is it about features and selling? And Sue, I know you've got some learning in that area, and I think that would be valuable for everyone to hear.
Yeah, it's so it can be challenging, sort of in a marketing mix, coming up with that right blend between brand and demand. And I'll tell you, I joined Digital Federal Credit Union from Bank of America, where one of the biggest differences is the size of your ad budget. So you had a little bit more heft with which to have that brand and demand message. You could afford the $80 million to air some commercial spots that make you feel warm and fuzzy about the company, and that felt like a difference. And then kind of get in with the mid-funnel demand generating kind of marketing that kind of pulled that through. As in credit union marketing, you have a little bit less to work with. And for some of us, Becky, you and I both, as a national brand, it's harder still, right? Since I think some credit union partners, by virtue of just a closed field of membership, have that opportunity to spend their marketing dollars very wisely in such a way that allows them to be locally proximate and create that brand and demand. For us, it's really thinking about the power of relationships. So the relationship with existing members. Another big opportunity we have is we partner with SEGs, with select employer groups, and DCU has relationships with about 800 of them. And so that's where your CU is a benefit that is offered through the HR department. And so a lot of, in terms of creating differentiation, there's creating differentiation between credit unions and banks or neobanks, right? Like there's just a value proposition that's different, that you are nonprofit. There is a purity of purpose, that members are the owners. There's some great benefits like get your paycheck 2 days earlier. Like that's a wonderful benefit. Rates tend to be more advantageous at a credit union, but you don't want to play on that rate. It's about the relationship and creating that distinction of like, we're a community of like-minded members that it's credit union. We extend credit to one another because we are pooling our resources for the benefit of all. So that's a value proposition you can play in. And to the extent you have some ownership over I would say unpaid channels like employer groups is a big opportunity. And then it's just really thinking about in your marketing mix, which digital is becoming more and more prominent, how do you target the message? How do you retarget? And looking at things like that multi-touch attribution. What's the touch strategy for a potential member, if it's through social, if it's through affiliate marketing, if it's through digital demand, and how can you start to unfold that story where you are promoting both a product that meets a need, that meets an immediate need or moment that's going to inspire action, but really also teases out what the broader value is of becoming a member, because it's a different value equation than just opening up account at a neobank. It's like you're becoming a member. And so creating that experience and creating that message throughout your channels powered by data, like that is really the holy grail, I think, of new member acquisition.
I like how you said kind of understand where they're interacting and not understand the journey and figure out how and where to retarget. So that magic word retargeting, I want to stop on for a second, because this is a very ripe opportunity, whether you're retargeting at the very top of the funnel, those people that are abandoning your application, or whether you're retargeting existing members to help them do things that they should have done months ago. Jen, I know you've got some stuff to say about the value in retargeting, having a second bite at the apple, if you will. What are your thoughts?
Well, first, I hate the phrase set it and forget it. I absolutely hate that phrase. You should never set it and forget it as a marketer, or you're not doing your job. You should always be looking at the data. I love what Sue said of understanding where they are within the funnel, to be able to provide them different types of information. It's so important to understand that. A lot of marketers get them into the funnel and then they stop. And then it's up to other people within the organization to then turn them into an account holder, or turn them into or opening up whatever product that they're trying to have them open up, or whatever they came in the door interested in. So I think it's super important to understand where they are there. But really, when you look at, just talking about the checking activation journey, right? So when you think of all of the services you're trying to have this member take on to be this fully engaged member, online banking, or using that card, getting the card on file, or that mobile app download, or even just getting direct deposit. You send them through this journey. Maybe you sent a couple reminders, and then what? Then they go through it and they may not do something. So now you're done because that's your journey. No, you're not done yet. You have to have the data at your fingertips to be able to re-engage based off of their activity, their actions, their lack of actions, and where they are. So you obviously don't want to be, pinging them while they're still in their journey to take action, because they're not done yet. But as soon as they are out of that journey, you should be following up and following up again. And then maybe on the third time where they're not following up and not following through on some of that service adoption, maybe that's the time for the survey, asking them why, understanding, gaining information from your members as they're not doing certain steps. So I think retargeting and having the data to be able to see the lack of interaction or where they're falling off is so absolutely critical, but don't stop at one journey. It's not just about one journey.
All right, so no setting it and forgetting it. And that includes the 2x2x2. There's a lot of credit unions that if someone opens an account, they reach out, take 2 whole days to reach out, and then they wait 2 whole weeks, and then they wait 2 months. That is set it and forget it. And we definitely don't want to do that. Becky, I'm going to bring you into this conversation because I see you nodding, and what are your thoughts?
Well, I love the set and forget, not ever using that. I think that was one of the things when I first came onto the credit union, it was, we want to create everything to be evergreen. We want it to be able to set and forget it. But we were missing so many opportunities in that. While we thought we were creating efficiencies, we were actually creating more problems because we had more churn that we needed to deal with. We now need more members and more engaged members, to be part of PSECU because we have all these unengaged folks that we just don't communicate with. So we really worked hard to change our onboarding process when you become a member, and where when I will say when I first came, as soon as you became a member, we decided we wanted you to have all these products versus really learning about you. Now we take the time to learn more about what your needs are. To the point, I forget who made the point, but if we constantly are sending out messages that do not resonate with your needs, you are going to start to ignore everything that we say, except for those warning accounts transaction happening, right? So we wanted to, take a step back and develop that relationship, learn about what your needs are, and then make sure that the message is in line with your needs. One of the things that we found out when we started to talk about auto ownership, we found out that about 6 to 9 months in a two family or two adult household, the other adult starts to have car envy and wants to get another car, right? So we started then to promote auto loans to those folks who got a car 6 to 9 months ago. It's really just paying attention to that data and looking for those opportunities.
That is such a good, I love insights like that. I bet you if you market to their next door neighbor, you might get a hit too. That's awesome. I know another credit union that discovered, and I don't know if you're all seeing this, that people are turning their cars in early. So not to wait until the lease expiration. Are you finding that at all, Sue?
Sorry about that. I'm actually not sure. That's an interesting insight. I'd have to dig into that, but it's we've gone through the last few years where there was just a car inventory shortage. So I'm wondering about that.
Yeah, sorry, I didn't mean to put you on the spot there.
Okay.
Just okay, sorry. We've got a question here from Scott. So I'm going to interrupt this to ask it. Okay. How are your in-house teams using generative AI, if at all yet, to either streamline or augment your credit union's marketing and/or member communications? Anyone want to weigh in on that?
I'll weigh in. I'll say that we're using generative AI more in the space of member servicing than marketing and communications at this point. So it's really about creating a broad knowledge base of insights based on what members are calling in, what they need service with, and how to automate answers that allow our call center reps to be more efficient at getting knowledge at their fingertips, and then thinking about where we can put things into self-service where we know people are encountering them very frequently. Those are our earliest use cases of generative AI, but we are definitely looking at it as well for generalized communication for, Jen, as you were talking about all of the multitude of journeys, like it takes a lot to stay on top of that, and knowing which journeys are your next best opportunity in terms of just where we're encountering those cases most often and where there's the most fertile, return on reach out, I guess, is. So I'd say that's going to be our next at bat.
Right. Wow, that's exciting. And Becky, I don't know, is PSECU at all using or looking to use generative AI?
I would agree with Sue. How we're using it right now is with our online chat tools and being able to better self-serve our membership base. As we move into more marketing or membership communications, we're dabbling in it. We're, really learning the ins and outs and seeing where we can create some of those efficiencies.
Fantastic. Well, we're nearing the top of the hour. I just want to give everyone an opportunity. You don't need to take it to share any last minute advice on things to do or not to do next year. Before I do that, I just want to let you all on the phone know again that tomorrow you're going to get an email with a recording of this session. We'll give you information there also on how to get in touch with us if you're interested. Okay, does anyone want to start with any words of wisdom in parting here?
I'll jump in. I'll say, words of wisdom, always, measure twice, cut once. Really deeply understand both your strategy, right? Your organization strategy. What is it you're looking to accomplish with your members? What behaviors are you trying to drive? And then deeply understand your members and create that intersect point where it's win-win, and just be really really thoughtful about your marketing investments. I'd say the mix is changing entirely. The tools and technologies are offering new opportunities, and just putting in some forethought in your planning for the next year will pay dividends.
Awesome. Alana, any final words of wisdom?
That was a great one. I love that. Anything related to measurement, Sue. I'd say probably this is one I typically generally recommend, and I find it's an area that could use more development, is having that ability to experiment and having that ability to be nimble. So there's no harm in having a test and learn budget, however big, however small, where you can, consciously experiment in certain areas and understand what works or what doesn't work, either within messaging or within new channels or tactics. And then being able to be fluid. A lot of times we have conversations where a lot of times budgets are really rigid and they come from the top down, and it becomes really difficult when there's different owners of different buckets of budgets. So having that fluidity where there may be an area that you had no idea would perform this well and you want to do more of it, but now you're hamstrung because you don't have the fluidity. So that's what I would suggest. If you can build that into your budgets for next year, I would recommend that.
Good call. How about you, Jen? Any final words of advice?
I think really important to just be aligned with the strategic initiatives within the business as a marketing department, and making sure you understand the role that you're playing as a marketing organization and what levers you're pulling. And then before you do anything, ensure that you can track the success of it, because as marketers, unfortunately, they're not necessarily revenue generating departments, but if you can prove what you're doing is creating that revenue or that generation to have revenue at the end, leading indicators and things like that, it becomes really, really critical. So understanding those goals, understanding the levers you're pulling as a marketing department, and then really being able to track those throughout from start to finish. If you can't track it, it didn't exist, I think. So
I think that's good advice. And just, I like how you frame them to us as key plays, and making sure you don't have 20 key goals for next year, but you really know what those important goals are, and importantly, that you can measure and report on your success. Becky, it comes down to you.
Comes down to me.
Yeah.
I love what everybody is saying here. And I think it's, for me, it's test and learn. Do not be afraid to test and learn. Try something different. When you think about, especially credit unions, we are traditional FIs, and it might be difficult to get buy-in from the stakeholders to try something new and different, like influencer marketing. But if you can show them the data, if you can show them the information around it, you can get that buy-in, and you can test and learn. And without the data, to Jen's point, without the data, it didn't really happen. So using that information to really, take a look at your marketing mix. Don't be afraid to mix it up. You don't have to do the same thing over and over and over again, So
I think that's
don't be afraid to test.
Yeah, it's evident that, all of your experience from outside of the credit union industry is just evident in how willing you are to kind of test, learn, and move on. So I just want to thank all of the panelists today for sharing their advice and experiences. And thanks to everyone who attended. Look out for an email from us tomorrow, and follow us on LinkedIn to see what other events we have coming up. Thanks, everybody. Have a great day.
Hey, thanks for having us.
Thank
Bye.
you.